Guys, I met Garet a few years ago now. And first off, I'm from New Jersey. Now, most of you wouldn't know that because I don't have much of an accent, but people from Jersey have a pretty thick accent normally. And I met Garet and I was like, wow, this dude has a thick accent from Louisiana. And dude, by the time I met Garet, Garet had been uh our prior company had something called Hall of Fame. So he was a multi-year Hall of Fame producer. Garet, how many years did you go Hall of Fame? Or is it three? Four? Four-time Hall of Fame producer. And I was like, this dude clearly had a lot of sales experience coming in. And then I asked around, I was like, where did Garet come from? I was like, had he been in sales for a long time? Like, no, dude, he was in the oil fields. I was like, what do you mean? Like, yeah, he had zero sales experience coming into this thing. So I don't want to take away any of your thunder, Garet, but dude, I was so impressed seeing how you came in and stormed the industry. And now you've got, man, your whole family's involved and you're a family man. You're one of my favorite people because I've gotten to spend some good time with you. I was blessed enough to get to be at your office grand opening down in Louisiana just by chance, and I got to see what you're all about. I've got to meet your wife and your sister-in-law who's a part of the business and your kids. And dude, you're just a great dude doing a lot of great things. And dude, you've been absolutely crushing, crushing lately with a digital mortgage lead. And you've said to me, dude, this is your words. You said it was one of the better leads you've ever worked in the industry. So I don't want to keep diving too much. I want you to unmute, dude. Give everybody 3-4 minutes on kind of your story, fill in some of the gaps that I missed. Let's talk about what you're doing on your lead side of things. And we want to role play today because one of the things, Garet, that I have found, people in the mortgage protection industry, dude, they're so used to direct mail, Garet. They're so used to direct mail. And when they try to make the pivot over to digital mortgage leads, they try to approach a digital mortgage lead like a direct mailer, and it doesn't work. It's different. And they assume, well, the digital mortgage leads are no good. That's not true. The approach to that lead was no good. And this is a big deal to me. If you guys are listening, if you miss anything else that we say today, don't miss this. I believe with all of my heart, with the knowledge that I have, digital mortgage, digital IUL, digital is the future. The cost of direct mail is getting more expensive literally every single year. I think last year there were multiple price increases on postage. So as the cost keeps driving up, it's making it harder and harder for agents to get a better ROI on direct mail, whereas digital leads are scalable to the moon. So if you're a single producer and you have that anxiety, what happens when direct mail goes away? Listen to today's call. If you're trying to build and you're thinking, how can I build a large agency on direct mail leads? You're right, you can't. You can only build to a certain point before you start cannibalizing your own organization. You need digital leads. And just the way I saw Garet dive into the life insurance industry and just kind of like start crushing it, he did the same thing on the digital side. So that was a lot of preface from me, but I have a lot of respect for Garet. I'm basically, Garet, going to turn the call over to you and shut up, but give us your story and let's hear what you got, man.
Yeah, thanks, Joe. About time you be quiet a little bit. Just kidding. No, so I come from South Louisiana, in the oil field my whole life from 18 to 33 years old. Uh, I basically stumbled on this life insurance gig by accident. I got laid off of work and got on unemployment, and I was in the office, so I was on $120,000 a year salary, company vehicle, gas card, and I was in my office job, and I got told I had to go back in the field or get let go. And when they told me that, I asked, well, what happens to my guys in the field? They said somebody will have to go home. And I was like, no, I don't want to do that to them. They've been working in the field and I've been at home in the office collecting a check. So I'll go home. They's like, give it 3 months and come back. I gave it 3 months and the unemployment went from $600 a week to $200 a week. And with 5 kids, well, 4 kids at the time, and sorry, 4 kids at the time, mortgage, boats, all this good stuff. I couldn't make that living anymore. So one of my good buddies called me up and asked me, hey, just simply, do you want to make 10 grand a week? And I was like, who doesn't want to make $10,000 a week? What's the catch to this? So I learned a little bit about the industry, learned there was more financial services, not just the life insurance world, because I was approached from a different company a long time ago and was not interested at all. So I did not want to do this, but I basically had no choice. So in a week's time, I passed my test, got licensed. I started in August of 2019. And from there, was doing all in home until just recently. So for those who don't know, I just started telesales in January, by the way. So everything has been in home. And like Joe said, the mortgage mailers dried up. Uh, but to go back a little bit, I was strictly in home, no idea what I was doing. I went on some ride alongs with my buddy who got me in the industry and just kind of piggybacked on what he was doing and was calling my uplines upline and his uplines upline just to figure out how everybody does it different. But I took initiative to reach out to people before and after every appointment. So I knew where I was failing or where I was succeeding to copy it and wash, rinse, repeat, basically. So with that being said, I was always told, hey, 20 appointments to 30 appointments a week, you'll make your 10 grand, whatever the case may be. No showed by this many. So I just kept consistency in my schedule is what I found to get me on the level I am today, which is nothing special. I just work hard. But I have a minimum goal set every day now with telesales, and I had a minimum appointment weekly sales when I was in home. So like Joe said, mortgage mailers were what I was running until January. Those had dried up to where I was getting 20, 30 a week to where I'm lucky if I get one a week. So I dropped all my mailers and I jumped right into these digital mortgage leads, which are strong point leads. And from there, I was not having good success at the beginning of January. I was dialing. I sold 2 out of 25 in my first batch. And I was like, it can't be this hard. I've done sold already. Why is it this hard? So I contemplated quitting. I called my old boss. I was gonna try this part time. I had an office, everything on my agents, but I didn't want to let anybody down. So I was like, I have to give it my all and try this all over again. So I made a call to Jesse, and I went to that office out there. Spent some time with people running the digital mortgage leads that were having success and finding out why I'm failing and they're selling. Long story short, I was treating it like a direct mail. I was being direct like I wasn't home with a client. I could go in home and close a deal and be back in a car in about 25 to 27 minutes. With the digital mortgage leads, I had to really slow myself down because I can't get points across when I can't visually show you something as quick as I can as if I'm in home. So I learned how to slow myself down with the digital mortgage leads and really pick apart who the clients were and what their needs were compared to just, hey, here's the thing you filled out, you want it, I'm here, I'm giving it to you, this is it, bam. So I really had to slow it down. And from there, I spent 3 days in a hardcore boot camp on how to dial digital mortgage leads. The first day I didn't do any dialing, I just listened in. The next day I took over and I closed 5 the next day out of 25 leads. So I already had closed more than I did previous for the last month or so. And well, I'll say middle of the month, it was like June 20th when January 20th, sorry, whenever I started the telesales. So from the 1st to the 20th, I closed 2 deals, telesales. And then the next day on the 21st or whatever, I closed 5 deals. So it took me to slow down and really take it in. And after that, I just took off and ran with it. But with
What
these
have you been Garrett, what have you been averaging monthly?
on a monthly average, I'm anywhere between 40 and 54, something like that.
And you're
Strictly digital mortgage.
You're only working the one lead type right now.
That's it. That's the only lead I've bought since January.
I want everyone to listen to what I'm about to say. From January 1st to the 20th, you said, when you sucked,
Correct.
to the next day when he sold 5, guess what changed with the leads? Absolutely nothing. Same ad, same funnel, same lead form, same delivery. Nothing changed with the lead itself. His approach changed dramatically. Completely night and day. So, Garrett, let's role play this sucker, dude. I want everybody to understand how to approach this lead type from start to finish.
Yeah, so that's perfectly fine. I just wanted to add to that. If I stop a little bit in between just to explain some things that I'm doing, because psychologically wise, I
Please
say a
do.
few things to make sure things are getting done like that day, things like that. Like there's a few little nuggets I drop. I just want to explain myself as to why I say certain things as well.
Please do. Yeah, feel free. This is all about education and content for the agents that were working direct mail mortgage leads. They're trying to transition digitally and they're struggling for some reason. I want everybody to understand the different approach. So knock your socks off, dude.
All right. So ring ring.
Hello.
Hey Joe.
Yeah, who's this?
Hey man, this is Garet Duet. Hey man, I was giving you a call real quick. You had filled out that mortgage protection response online yesterday. It looks like it was about noon that you filled that out, where you put your wife would be your beneficiary. That sound familiar to you?
I think so.
Yeah, so I was calling you because I've had got that response in. It's just my job to get that information over to you. How we doing today?
Dude, I'm doing all right.
Yeah, hey, is this your cell phone real quick, Joe?
Yeah, it's
All
myself.
right, perfect. I'm sending you over my business card right now. It's going to have my NPN, my face, so you get to see who you're talking to, along with my state license for New Jersey. Okay. Let me know
Got
when
it.
you get that.
I just got it, bro.
All right, perfect. Now you get to see who you're talking with. So, real quick, I want to confirm a little bit of information. If that's fair for you, then we'll go from there. Okay.
Perfect.
All right. So, Joe, I have you at 32 years old. That's correct.
Correct.
And your email is the number one Joe at yahoo.com.
That's me.
All right. And right here, man, it says your outstanding loan balance is less than 250,000. Can you ballpark that loan amount that you owe?
Yeah, dude, I'm about 240 right now.
240. Perfect. Is that new or refinance for you?
That's new.
That's new. And how many years have you been over there?
Dude, I've been here for a bit. I think I'm 7 or 8 years into this mortgage.
All right, fair enough. So we'll just round that to 20 years. That sound good? That we have left on it? All right, perfect.
Hey, let's stop real quick, Garrett. Let's stop real
Yeah.
quick. Because I want everybody to understand something important here. When you guys are buying a direct mailer, your client is filling out how many you think on average, Garrett? How many mailers they filling out?
14.
About 14 to 20. So you're competing with a bunch of people because the mail house collected publicly aggregated data and they sent it out 20 times. So you're only talking to people who just bought a new home or just refinanced in 85, 90% of the cases. Garrett, how much competition have you been dealing with on the digital mortgage side?
0, and I've sold one from another agent. They gave me one from October. It's completely exclusive. And it's confirmed phone numbers. So people on mailers could write fake no phone numbers, and you get 5 mailers in at one time for fake phone numbers, fake names, and you're not getting your money back off of that. With these, it is all confirmed phone numbers, and they have to put first and last name on the form, and text that code once they get this lead in saying they did fill that out.
I love it, dude. I just wanted to make that point. And by the way, I want everyone to understand I'm not crapping on direct mail at all. There's a place for it. Second chance direct mail, fresh direct mail. There's still, if you're in a spot where you can get enough direct mailers, it's a great lead. If you're grinding out second chance direct mail, dude, it's the best ROI you're going to get in the industry. I'm all for those things, but I want people thinking about the future, Garrett, because at the end of the day, if I'm working a 1-year-old lead or a 2-year-old lead, unless I got AI helping me out, which a lot of our agents do at this point, dude, how long can I grind out 8, 10 hours on the phone? I think there's a shelf life on that. I really do. And I want people to understand the vision of where they can be going. So let's get back into it, Garrett. You just confirmed up some information. You found out I've been in the house for a few years. I got about 20 years left.
Correct. So, Joe, real quick, the reason I ask you all that is because this is a qualification process. This is not a one size fits all, and you can't buy anything. Okay, you can't just purchase this. So, number one, we have to see if you qualify. So, real quick, I'm going to see the qualification questions and see if you fit in for us. So, history of cancer, heart attack, diabetes, or stroke. I see you put no on the form. Is there any other major illnesses you may have suffered from or been diagnosed with in the past 10 years? What about
No,
the? Oh, sorry. I'm doing it visually. Go
no,
ahead. No. Okay. And what about the small stuff like preventatives for your daily, Joe, like blood pressure, cholesterol, thyroid, antidepressant, or any diabetic medications?
dude, I had some cholesterol, but I was able to get it under control with diet.
Okay, perfect. So no prescriptions then.
No, sir.
All right. So right off the bat, Joe, it looks like you can qualify for some plans. But first, I just want to make sure I got this correct. So you want to make sure that if something would happen to you personally, that your wife would have this mortgage paid off.
Absolutely.
Okay. And then also, Joe, you understand that these mortgage protection plans pay you while you're alive, so that would pay off to you as the beneficiary in
I
case
don't
you were
think
disabled.
I don't think I did understand that. How does that work?
Okay. Well, I'll jump right into that here in a second. So, with your beneficiary being your wife, if you passed, worst case scenario, I want to make sure that's exactly what you were looking for, and that's what we're going to figure out today. Okay. So, I always say that with every client, whatever they say there, whenever I said you want to make sure that happens for your wife, I always say today, letting them know today is the day that we're going to find out. Okay.
Got it.
So, with that being said, Joe, as the mortgage protection pertains to you, like I said, number one, we need to qualify. Number two, I need to make sure it fits your budget. Okay, Joe. And three, to make sure you fully understand. So since you don't understand the disability part, I want to jump into that a little bit and tell you how that works for you. So I broker between 40 to 45 different carriers across the United States with mortgage protection, life insurance, and annuities. So what that means for you is I can shop around and customize this based on your health, your age, your gender, and what you owe on the mortgage. So that way I can really narrow it down and give you the best bang for your buck. Is that fair enough?
That's perfect.
All right. So Joe, with that being said, there's three types of benefits that come with most of these mortgage plans, and that is terminal, critical, and chronic. So the terminal, Joe, that pays off your mortgage while you're alive to you if you have a year or less to live in the state you're in. Next is critical. Let me slow down for a second. I usually ask them, do you have a pen and paper at this point to write down terminal, critical, and chronic? So I'm going a little
Okay.
fast.
Slow
So
down.
Joe, if you can't grab a pen,
Yeah, I don't want anybody to miss any of the secret sauce from Garet Duet. So
right.
slow down for everybody.
I'm getting excited, man. So Joe, if you can't grab a pen and paper, let me know when you're ready.
I'm ready.
I want you to write down these three benefit types for you, okay?
Okay.
The first one is terminal.
Okay.
Just write down terminal for me. You don't have to write down the rest. I'm going to explain what it is. So that means if you have a year or less to live in the state of New Jersey, this will pay out to you while you are still alive. Next is critical. Just write down a note critical. You do not have to write down these definitions. They'll be in the mortgage protection plan for you, but this consists of cancer, heart attack, stroke, ALS, Parkinson's, dementia, Alzheimer's, organ transplant, renal failure, deafness, blindness, HIV, or amputation. Okay, so all the bad stuff you don't want to have happen. If it does, we don't want to speak it into existence. Yesterday, if that happened to you, your mortgage will be paid off. And the last one, Joe, is chronic. This is the disability side that we talked about. What that means for you, Joe, is in the event that you would become disabled to where you can't do two of your daily six activities, that's clothing, bathing, feeding, toileting, transferring, or taking your medications, this is going to pay out to you. Or if you were put in a walker, wheelchair, cane, or oxygen to where you needed that daily, this is going to fall underneath that category. Once again, we're not speaking it to existence. But you're 32 years old, you're still working, correct? So unlike life insurance, Joe, what this means for you is you get to enjoy your house while you're alive and don't have to die for your wife to be taken care of. That makes sense for you?
I'm gonna pause you. I'm gonna pause you, Garrett, because yes, it makes sense. Guys, he's not reading this off. You understand this, right? He's reciting that stuff because he's a real professional and he understands his craft. So, Garrett, how many presentations have you given at this point?
I don't know.
Thousands.
On my strong point leads, I'm at 984 strong point leads. So I guess divide that by 50, 60% of the people I've talked to.
Let's go, dude. Here's my point, guys. If you want professional results, you got to practice like a professional. You play like you practice. So learn these scripts, dude, inside and out, to the point where you get to think about how you're saying what you're saying instead of what you're saying. That's what he's doing really, 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 really well. And that line he just gave about why this is different than life insurance is really important. Go ahead, Garrett.
All right. So back to where we were. So Joe, if all that makes sense for you, now that you understand the disability stuff, tell me a little bit about yourself. What do you do for work? How long have you been there?
Yeah, dude, I'm a youth pastor, been doing this now for about 8 years.
Okay. So it's safe to say your job isn't super dangerous, right? You're not a police officer, active military, or doing any crazy bungee jumping or anything like that, right?
I don't know, dude. These fifth graders are pretty wild.
All right. Yeah, I hear that, man. I got it. How many do you have any kids, Joe?
I do. I have a 5-year-old son.
Awesome, awesome. You love being a dad or what?
Oh, dude, absolutely love it. Definitely the best thing I've ever done. Most important thing I've ever done.
So let me ask you this real quick. If something would happen to you and your spouse at the same time, God forbid, are you looking to make sure that full mortgage is paid off for your son to keep that house, or are you looking to make sure that he'd be able to sell it?
I mean, if
I know
there's,
he's a minor, sorry, but
yeah, I mean, I don't understand what it's going to cost me, Garrett. Obviously, I'm on a budget. If there's a
Mhm.
way to have it paid off, that would obviously be ideal.
Perfect, perfect. So Joe, what I do with all my clients, I show them that full mortgage amount, three quarters and half. Okay. Reason I'm asking those questions about what you do, because your job isn't that dangerous. So I'm leaning towards something with a lot of living benefits for you because you're more likely to get sick than pass away. Is that fair enough? You're
I
not
think so.
dying of the old age of 32, right?
Probably not.
Let's hope not. So, if anything did happen to you, Joe, it'd be some type of accident or an illness. So, this is very important with the mortgage protection because you should outlive this mortgage per se. So, with that being said, Joe, I want you to write down that full mortgage amount of 240,000 that you gave me.
Okay.
I want you to write down three quarters of that, which we're going to put right at 200,000.
Okay.
Then I want you to write down 150,000, which is roughly a little bit less than half, or right at half for us. Okay.
Okay.
Reason I want to show you that, Joe, is because these benefits for the mortgage protection plan will not decrease with the amortization of your loan. Okay. So what that means is you've been paying on this house now for 10 years or so, 8 years. Your mortgage has decreased through those times. So I like to ask all my clients, what type of life insurance do you have, or anything that acts like it that can help offset this mortgage? So Joe, do you have anything that can help offset this mortgage as well, of life insurance, or anything that acts like it, like IRAs, 401ks, private life insurance outside of work, anything like that going on for you?
Well, I have a work policy at the moment. The church actually pays for a portion of it. So I have that through the church. And then I have a 401k as well.
Okay, perfect. And so obviously, the way that works is if you have to pass away for your beneficiary to get that, right? So just so you know, your work policy will be taxed upon death if that happens to you. So your wife will pay taxes on that. And the same with the 401k. So yeah, that can help offset some. Do you know a grand total if you did pass away that they would receive?
Dude, I want to say my life policy is a quarter million, and 401k, I don't know. I probably have about $70,000 in there right now.
Okay. So this is just me assuming, Joe. I assume you looked into the mortgage protection because you want to keep that separated for your family. You want the life insurance and your 401k on one side, and you want to make sure they're not spending that money to keep this house. You want something separated that this house is paid off for them.
Yeah. I mean, obviously, you know, I, my wife's young and I want to make sure she's got some spending money too. She's got some wiggle room.
Perfect. Completely understand. And that's what everybody usually does, Joe. They separate their mortgage protection from life insurance or their assets that they may have. So what I want you to do on those prices, on those premiums that we wrote down, sorry, I'm going too fast. On those face amounts we wrote down of the full mortgage, three quarters and half, I'm going to go with a company for you that I think is going to best fit your needs here. And then from there, I'm going to quote them the 30, 15, 20, whatever. And from there, I say, okay, Joe, out of the 240,000, the 200,000 or the 150,000, and here's the premiums amounts: $200 a month, 150 or $100 a month. Out of those options, number one that you can qualify for, we need to find out that option. But number two, Joe, what fits the budget the best, but also gives you that peace of mind that your wife and son's taken care of if something were to happen to you today? Do you want to leave them with the full mortgage, three quarters, half, or zero?
Uh, I need to see the pricing. I'd like to do full if I can.
Yeah, so Joe, like I said, the 240,000 is $200 a month. The 150,000 is, I mean, 200,000, $150 a month, and 100,000 is $100 a month.
Is that going to be the best cost?
For the living benefits, yes. So Joe, what I can also do for you there is, if you don't want the living benefits, you start falling into the life insurance categories. And like we discussed, it's more important right now to cover you while you're alive than dead. Correct? Is that fair?
That's
So
fair.
I can give you cheaper prices, and so couldn't anybody else. But Joe, I'm not here to beat you on price. I'm here to show you the value of mortgage protection.
You guys should be taking some notes. Garrett, this is good. I'm gonna say, yeah. I think I could swing the 200 a month.
All right, perfect. So Joe, real quick, just to make sure that that's going to work for you, no DWIs or felonies in the last 5 years where your license has been suspended or you're on trial for anything?
No, sir.
All right. So when we do this request the coverage, let me go back for a second. Pause. I said zero for a reason. I don't know if you caught on to that. So even if I'm doing final expense, just so you guys know, or mortgage, I always throw the full three quarters, half, or zero out there. Because if you say their spouse or a child and you put that zero, I rarely ever get anybody say they want to leave them zero. So it makes them pick an option. Just a little tidbit there.
That's a gold. Like, dude, if people just took that from this call, they're gonna make more sales. That's huge.
I believe they filled it out for a reason. They, like, I don't know. For somebody not to be able to purchase something or to settle on one of the plans, you had to have done something wrong to where it's way out of the budget, which you can help that, or they just don't like what you're doing, or it doesn't make sense to them. So anyway, we'll get back to that. So Joe, real quick.
Dude, wait. Somebody just put in the chat that you're a Louisianimal. That's amazing, dude. Anyway, go for it.
Yeah, so Joe, real quick, I'm gonna run you through the process of putting a request in. So once again, I don't say application. I always say request. And I don't say the word approval. I say qualified. I don't know if that works for anybody or not, but that's what works for me. Nobody likes doing applications. Just like you're going to trying to fill out something for work, you don't know if you got the job or not. So I say we're going to put in a request of coverage, Joe, and there we'll see if you fully qualified. You do pre-qualify with the questions I ask you. That'll take us about 7 minutes, Joe. So what they're going to do is look at your MIB report. We know that's clean. You said you had an issue with your cholesterol, but that's not a big deal. So what I'm going to do is ask you a few questions. We're going to get to know you a little bit personally. They're going to verify you are who you say you are. And from there, we're going to see if this makes sense and we can get a qualification. Fair enough?
Fair enough.
And then I jump into the application. And as I'm doing the application, just little tidbits on how I get zero rebuttals for banking and social. That's kind of what I'll hit on the most here. So Joe, we'll start off with that. First name, last name, date of birth. Now, Joe, you said you are okay with me doing that MIB check for your prescriptions, correct?
Yeah, that's fine.
All right, what's a good social for you, Joe?
That's good, dude. Man.
So I don't get a rebuttal, but if I do, what do you need that for? Well, like I said, they got to make sure you are who you say you are. But
yeah, I don't feel comfortable giving you my social.
Perfect. I understand that, Joe, completely. That's why I sent you my license number, so you can see you're working with a licensed individual. But this is how we're going to check your prescriptions, and we're not running someone else's where you can get a decline or anything like that and not qualify, if that makes sense for you. Because we want to make sure that this is running your prescription background and not your dad's by accident if you're a junior. Make sense?
I am a junior, actually. That makes sense.
Perfect. All right, Joe. So what's a good social for you?
Got it.
All right, next. All right, so I'll go through the application process, get down to beneficiaries, yada, yada. All right, Joe. So if you do qualify for this plan, What day of the month is best for you to do a reoccurring payment? And
The
here I
first.
said reoccurring just to take a note.
The first.
The
I like
first
on
of the month?
first.
Perfect.
Yeah.
So what that's going to allow you to do, Joe, is give you a month to try this on from the first, and then you can decide if you want to keep this, increase it, decrease it, whatever the case may be, because you get a month of free look. So with that being said, Joe, what bank do you want to put on file if you do get qualified?
I'll use Wells Fargo.
All right, Wells Fargo. And from there, most of the time, the way I do it, I'm Googling a routing number. And then I say, hey, Joe, it's coming back with Wells Fargo in Jersey as 11235678 or 9 digits, obviously. Does that sound correct for you?
You guys, hopefully you're listening to the wording even on that. The wording on that was superb. That's the best I've ever heard somebody asking for bank info. Phenomenal. Yeah, that's my routing number. Yes, Garrett.
All right, perfect. And Joe, if you do get qualified on this, do you want to, when you make a payment, do you want to use a checking or a savings account?
I'll use checking.
Checking, okay, yeah, that's what most of my clients do anyway. So here, Joe, what's the checking number for you that you want to put on file?
1, 2, 3, 4, 5, 6, 7, 8, 9.
And it's that easy. If they give me rebuttal to a checking account, I do the same thing as I do for social. Hey, Joe, we don't take debit cards because unfortunately, that's not safe for you or me. You can purchase things with debit cards. You cannot purchase anything with a routing and account number. So you can't go to Walmart today, forget your wallet, and give them your routing and account and make a purchase. It's not going to happen. So this is how they, once again, make sure this is your bank under your name, just like your prescriptions, because we're sending this in for review. They need to make sure everything matches to you. Is that fair?
That's fair.
Perfect. So, Joe, uh, like I stated before, unlike life insurance, this mortgage protection does not come with a 2-year waiting benefit. This is immediate. So, just so you know, we're going to put in this request for you. From there, Joe, we're going to get that immediate approval or decline. Your coverage will start immediately, and then your reoccurring draft date will be on the first. So, if you're approved for this, in 24 to 48 hours, you're going to see that come out of your account. Smile, your family's protected. And then from there, it'll be the first of every month. That's fair for you?
That's perfect.
All right. So, Joe, I'm submitting those documents right now. It's going to come to you for signature via email at the number one joe@yahoo.com. From there, let's go over it together. We want to make sure there's no discrepancies in anything. Check your name, your date of birth, your beneficiaries, check all your information, make sure that's correct. Then what you're going to do is sign, and then I'll sign it on my end as a witness to make sure everything was done properly today. And boom, that's about it.
Dude, that was butter. Butter. All right. I'm gonna open it up. I don't open it up for Q&A every week. I'm gonna open it up for Q&A in a minute. We're gonna do probably 10 minutes of questions because people that got them. I know they do. By the way, several of you sent me a personal message and asked where you can find the recording. It'll be on Slack and Discord. So you'll find it there. Let me ask you a question.
Yeah, go ahead.
I was looking at reporting. The large majority of your business is with one carrier. You're the number one agent we have with this carrier. Why are you writing so much Kansas City Life?
Because I love the one I'm with. So that's a simple question. Really, really, really simple answer. So Kansas City Life, number one, their product is unheard of for mortgage protection to me because we've dealt with a whole bunch. But the fact that it's convertible, I sell that a lot when I'm pitching Kansas City, especially the older clients who tell me they don't have the life insurance portion. I let them know that they can convert this into life insurance after the mortgage is paid up. They love that. And number two, the pricing is very fair for what they do for us when it comes to the living benefits. And you always have, depending on the state now, those two extra premium waivers that are really awesome in Louisiana. So obviously I pitch a lot in Louisiana and I let them know, hey, we have a lot of hurricanes down here. If you lose your house, your mortgage protection is still going to cover you in case something happens while you are out of your home. And they're going to pay this for you. So they really love that. And then the unemployment waiver premium. Obviously, you're still working, Joe, right? I would have went into that more, but hey, if you get involuntarily unemployed, So what that means for you is that if you're fired or laid off involuntarily, they're going to pay this waiver premium for you until you get back to work. Of course, you have to prove that you're going to be looking for a job, but this will be paid for you. Those are some bigger selling points than just, hey, you get terminal, critical, and chronic at certain percentages. But Kansas City Life's underwriting, number 3, is by far, I know it's accelerated, it's not instant decision, but I like it in a way because I had clients that I was skeptical about getting approved and they had to do a phone interview and boom, they really ask clients the follow-up questions that you need to get them approved where they can justify, and a real underwriter takes that in consideration instead of an instant decision to where it's just med report, prescriptions, boom, done, you're out. So
We
I
have our
really like that.
so that everybody understands, Pinnacle has their own underwriters for Kansas City Life. We have our own underwriting team. They love our group. They love our group. And we're seeing the best approval rate with KCL by far above any other carrier. I'm a big fan too. Man,
And
gold. How many chargebacks have you had from KCL?
KCL, I had one. And the client, once it drafted, she was kind of upset that it drafted before the reoccurring date. So she didn't fully understand. So that's on me. I tried to keep it on the books, but I've had one chargeback with KCL, and this is God's honest truth. Since January, since I started, I've had 5 chargebacks on my strong point leads. 5.
You've had
Reason being,
you had 5 chargebacks since January.
since January was strong point, yes.
I didn't
Reason
know.
being, nobody else is calling these leads, so they're exclusive to me. But I'm doing a lot of follow-up work on the back end of this to make sure they understand what they have, to make sure they understand the coverage, if other people call them, everything. So,
And you've had one with Kansas City Life, and you put how much?
one error.
I think I looked. You got like 120 grand or 130 grand with Kansas City Life right now.
Something like that. Yeah, I know we're at
130K.
155 total, and 120 of it's with KCL.
Enough said.
So,
Wow.
if I can, I want to just piggyback into digital as to how I'm keeping so much business on the book.
Please do.
So I have a personal policy summary. I know a lot of my team on here have seen it already and they use it as well. As soon as we wrap up that call, Joe, hey man, now that we got this submitted, what I'm going to do, Joe, I'm going to send you my state license again in an email, along with a policy summary for everything you need to know about your carrier. We'll have their phone number in case of anything happening, like emergency wise, when you can't get in contact with me, you can contact the company. From there, it's going to have all the information. So that policy summary has the carrier, their phone number, draft date, monthly premium, beneficiary, policy number. If it's cash back, it says on this date, I will get this much money back. And then at the bottom, it says 100%. And I either type in mortgage protection, final expense, IUL, annuity, life insurance. It also says, if any other agent calls you and tells you you don't have exactly what I've told you you have today, they are lying to you. Please call me back at this number. And it's got my phone number on the bottom.
You email that or you mail it?
I email that. It's pre-typed up already. So
are you willing to share that with the group?
yeah, 100%.
Please put that in Slack in the
okay.
Everyone.
Obviously, everybody learned how to edit a PDF at that time because it does have my information. I don't want your clients calling me. Yeah. And it's got my logo on it. So you can put a Pinnacle logo. I have my Duet Financial stuff on there. So I email that, and I also email them the brochure of what they have. So I'll put Kansas City mortgage protection brochure into the email as well. Same with Prosperity. I saved every carrier's brochures of all the products that we sell.
So to be clear, you've done $150,000 since basically February.
Oh, that's just with Pinnacle, 155,000.
Just with Pinnacle, and you've gotten less than $10,000 in chargebacks.
Correct.
Probably 6 or 7 grand.
Correct.
If I was y'all, I would go back and listen to this recording. Like, I'm not exaggerating. Like I read Proverbs every day. I could read Proverbs every day and learn something new every time that I read a proverb. I would go back and listen to this one like 15 times. I'm not exaggerating. I'm not trying to gas Garrett up. You will make more money doing what Garrett is doing, and you will, more importantly, keep more money doing what Garrett is doing. How many leads do you get a week? Jessica asked. That's a good question.
All right, so this is me probably saying things I shouldn't say because this is not easy by any means, but I rotate between 50 to 35 leads a week because I do have overflow. So I don't
Okay.
want to say you can buy 35, 50 and then submit 20,000 of business. That's not the case. It's just that I know I have a built-in system and what I'm consistent with. Okay. So everybody is going to be different on that. So me personally, between 35 to 50 leads a week.
If you had a new, let me ask you the question this way. This is a better way to help everybody. If you were new to digital mortgage and you wanted to write $10,000 a week, so you had a, let's say it was your wife.
Okay.
Holly wanted to write 10 grand of business a week on digital mortgage. How many leads would you get her to write 10 grand consistently, being that she's new in digital mortgage?
50 to 75.
Okay.
Fair enough.
Fair enough.
That's going to leave you about $2,000 a week of what you're spending in leads. That's 8 grand a month. If you sell 10 policies a week, obviously that's about 40,000. So I'll take that bet all day, every day.
And then you get better at it. You can buy fewer leads and get your ROI better.
Correct. And so right now I'm on a consistent basis. So my minimum goal per day, I usually do not stop dialing unless I hit 2 sales a day. So if that takes me all day, I'm not stopping. If it's early, I'll keep working, obviously. But it allows me so much more time with the family, uh, to not miss things, to be off, like to handle calls. Like on Monday, we're always busy. We have this call, then our other call later on. And throughout the week, I can set my schedule, but I know I'm getting those 2 sales in a day. So if anybody pays attention to the daily, our weekly submit numbers, I try to stay consistent. You usually don't see less than 14 applications in there. So that's 7 days a week, averaging 2 policies a day. And typically I'm working 6 days a week.
You're one call closing everything, right? You don't book appointments.
I booked 2 appointments last week off all that, but I'm one call closing everything. Yes.
Okay.
Some things are unavoidable, younger
Yeah.
clients, but yeah, at the most, I've probably never had more than 5 appointments in a week off of these leads. It's all one call closes.
So, Joseph, you asked about lead vendor. Several of you guys have. It's Strong Point Digital, strongpointdigital.com. Somebody asked about the lead cost. What do you pay per lead right now?
So with my discount code or without, so my discount code is like 47, 5% off. And then with a full lead is $50 per lead.
I'll tell everybody a little secret sauce that I'm working with Strong Point on. In the next, I'll say in the next 45 days, we're beta testing something right now that I'm massively excited about. When I say massively excited, I mean I think it's going to change the game for Pinnacle. We got a few things that are pretty exciting, but this is one of them. And since we're talking about it, I'll give you a little breadcrumb sneak peek.
It's
We Gabe. He just landed in New Jersey, so all of a sudden he's Italian. I love it. He knows what's up. How you doing? Anyway, so the thought is, can we get a premium Strong Point lead in everybody's hands under $20, tied into AI? We're seeing right now a higher than 50% conversion rate automatically booked on your calendar. And we're seeing an above a 50% show rate on an AI booked appointment with a digital exclusive lead. We're really excited about this. And so we're trying to drive the price down to change the game for everybody. Now, don't quote me on conversion rates. It's still in active beta as we speak. And of course, with larger, with more data, the numbers can change for better or for worse. Any way you slice it, it's outstanding and it's going to change the game and it's scalable to the moon. So I am massively excited about it. What time we got? 3:47. Let's see here. With these leads, how to work. I was just looking. That's a good question from Angel. Do you get that one a lot, Garrett? Do you get the I was looking for quotes?
Yeah. So whenever I hear that, this is my being firm rebuttal to that. So if they say they're looking for quotes, I'm like, hey, thanks for sharing that with me. Unfortunately, I'm not a quote guy. I actually work on the qualification part because a quote doesn't protect your family, qualifications do. So I make sure you can even get it because quotes are just fake numbers to me. I want to show you something that's real. Is that fair? So if you bear with me, we'll go through the process. I'll give you some numbers that are legit, and then we can see if you qualify. So I just kind of brush it off.
I like that. I like that. That's a great approach. I'm not a quote guy. Anybody else have a question that
I just
hasn't?
saw one. How do I transition to equity protection, which is really good. Uh, so
Show 'em.
number one, if they can't qualify health wise, I let them know right off the bat. Hey, unfortunately, since you had that heart attack and you're on the blood thinners, you qualify for what we call equity protection. Now, Joe, I see here we wanted to keep the house. So I want to show you how to keep the house with equity protection. The way we do so is a small amount so your family can take over that house note or refinance this. So I show all my clients if they say they want the family to keep the house, I show them 50% what I could do in whole life. So 50% of the mortgage, 20% of the mortgage, 15 and 10% of that mortgage amount into a whole life policy. And I'm letting them know that this is going to be a guaranteed payout versus a term because you are older that you couldn't qualify and you would only get a 10-year mortgage protection plan and you're 70 with a 30-year plan. Do you want a guaranteed payout for your family or do you want something that may not be there anymore? So I show them that. And then if they say they want to sell the house, then I say, okay, how much a month are we paying monthly with the escrow and insurance on this mortgage? They give me that amount. I say, okay, we're going to look at 18, 12, and 9 months of payments for you to cover that house so they can sell it to get the equity or value. Fair enough? And they say yes. So to keep it, I just show them percentages of the mortgage. And to sell it, I show them the monthly house note for 18 months, 12 months, and 9 months. Sometimes 6 if they're on a tighter budget. Very simple.
I love it, dude. That was phenomenal. All right, last question. This is from Malak. I think it's a great question. Then we're going to let everybody bounce. This has been so good. Garrett, thank you very much for coming on and pouring into the team like this. Malak asked, what was the biggest change you made in your mindset / script that helped things click for you in January, switching from mailers to digital?
So my mindset when I was going in home, I thought I was closing everybody I talked to, and it turned into I was only booking 2 appointments a day and closing those. So I got spoiled. And then when that wasn't an option anymore, when I got into the telesales, I think in my head I was gonna just close them that easy. And I was maybe too cocky or confident on my phone calls or coming on a little too aggressive, trying to speed through the process. Usually my average call now is about 35 to 45 minutes. Sometimes it's less than that, people who really ready to buy. But I dig into the client with small talk, which I didn't do with Joe that much just because of time constraints here. But I like to get to know them a little bit and make small talk because everybody loves to talk about themselves. So I just ask a few questions, but keep hitting my key points that I need. So I just have to slow myself down. So my mindset was, okay, not everybody's going to buy like in home. I have to play a numbers game at first. So I just had to make more dials actually and get used to the script that I had in my head. And from there, man, I really just slowed down the process. That's the biggest thing I did different. Just slow it down.
I love it, dude.
Hey,
This
Joe.
has been this has been a clinic. I'm gonna take somebody just said something. Who was it?
It's me, Jesse.
Jesse, what you got, bro?
Hey, you guys, Garrett, Garrett and I are always on the live dials on Discord now. One of the things I would encourage everybody to do, because now you can see the names of who's in what's room, jump into the room with us. I've been working with Garrett for almost 4 years now.
There's certain things you can't fake, right, Jesse? So when it's authentic, it means something. By the way, Jesse, did you miss the hat memo? Because Garrett's hat is amazing.
Now you got the Duet Financial hat on. Though.
Duet Financial, let's go. Guys, this has been awesome. Garet, love you, bro. Thanks for pouring into everybody. What Jesse just said, some of y'all are like, hey, Garrett's a stud. That's been butter. How can I get more of this? Dude, get on Discord and listen to him dial. Go listen to him live and in action. If you missed the beginning of the call, he said when he was sucking for the first 3 weeks of January, he took a couple days to do nothing but listen to other people that were killing it with digital mortgage. Maybe you should take a day and go shadow him. You don't have to fly to Louisiana. Hop in, listen to him on live dials. We're living in 2024.
Or come fly down and we'll feed you good.
Or you get some good jambalaya down in Louisiana. Well, either way. All right, y'all. Let's have a monster week. I appreciate all of y'all. Let's help a ton of clients. Let's get them the right policies, mission over commission. I want to see everybody win, not just sell a lot of insurance. I want you guys to help clients and most importantly, be profitable. Keep your money. Keep it. Making it's one thing. Keeping it's another thing. So Garrett's doing all of the above. Appreciate you again, guys. Garet, appreciate you. Talk to y'all real soon.